Good morning, everyone. Today is Monday, January the 23rd, and this is the Moneyball Morning Report for the Benzinga Pro platform. Hey, thank goodness we have a little bit of a blackout period from the Fed speakers. They can get so very noisy when it comes to market movement. But what we've had is something very interesting that we can see moving along with the charts. One of the first things that I see is that we really have been sitting around. We had a savage fade on Thursday or Wednesday, and then by Friday, we are right back up in the fray of the top edge of motion. So here's my thought. Traders are trying to force the Fed to realize that what they're saying doesn't matter anymore, that the market is going to tell the tale, and the tale the market is telling is, hey, listen, you're going to have to back off of these interest rate events, and if you don't, somebody in public office is going to kick you out, because these folks are appointed, not elected. This is very, very important. So there's a push and pull between very big and very deep pockets that are saying, listen, the Fed is going to pivot. It's only a matter of time. Because of that, it's putting people into the market that says, hey, listen, eventually, not to worry, we're going to get free money or very cheap money, and things are going to be sunshine and roses over the next whatever. Pick your date. What we have to realize is that positioning will make us as near-term traders very susceptible to getting washed out in any kind of big market flow. So we must become very tactical. What's in the news? The big thing is we've got a huge earnings week ahead. We've had several folks start to tell us the story. So far, Baker Hughes has missed fourth quarter profits. Schlumberger has beat fourth quarter profits. A few Indian banks are doing well. A few Indian banks are doing terribly. And so it's really about how these companies have positioned themselves overall. Again, a mixed bag. Nothing flowing in the same direction. Tech announcing earnings in these weeks ahead, but also letting a lot of people go because of a big ramp up in what they thought would be future earnings. Why am I spending so much time on the backdrop of motion? It's this backdrop that's really going to tell us what we're doing. And here's the thing, with the real blackout period coming as it sits right now, this entire week, no Fed speakers, because next week they're going to start telling us what's going on, and we're going to have some very big motions in the market in general, unless the move is already baked in. So clear as mud, right? Here's all we have to do. As tactical traders, we're going to look at the following. Listen, how did last week do? Last week gave us a higher high, could not hang on to it, shoved all the way down to the open and below the open of the prior week, and we held it and recovered a very big amount. Today, we're going to watch to see how the open of the last week measures as frontline resistance. And so that's up here. The close of last week is going to be sitting right there at the 39.88. That's going to be that frontline support. But again, this is a key level of weekly support action. My thought is we're going to have ourselves a sideways week, but it could be very wicky. All right? If earnings come in horrible, we're going to gap down and then pop back up. So essentially, folks, we're sitting in this very wide swath. Remember, the purple lines give us the month. We're sitting inside of this range, and what the range has started to do is compress. We're going to have a big move at the end of the month, beginning of the next month. Here's the thing. A few traders have been sitting in these formations and they really believe it's going to be bullish. They're making individual multi-million-dollar bets in the option chains, pushing things forward. Can people make multi-million-dollar bets that go bad? You betcha. So that's not what we really want to think about. We want to know that in the back of our mind, but what we really want to think about is, how am I doing today relative to yesterday, or this week relative to last week? And right now, we're holding the close of last week. We're above it. And so what are we going to do? We're going to push through the midpoints. Take a look at where we're sitting right now, right here on the close of this candlestick, right near the midpoint of this candle body. And this top edge, where this candlestick opened several weeks ago, November the 28th, we've got it as topping formations from here to here. Here's what the big guns are saying. Big market participants are saying, listen, 3,900, likely the floor, 40, 45, likely the ceiling, until the Fed comes in and it pushes us in one direction or another. What does market participation tell us? 2 weeks ago, we had a big rush in volume. Last week, we had a shallower rush in volume downward. So right now, it's telling us more buying than selling. Okay, so we're going to pay attention to how this week resolves. If we take a look at our morning formation, we can see what we're doing is moving into this heavy congestion area. My suspicion is that it's somewhere around this, maybe this close 4007, or right up here into 4024. Ultimately, as long as we are above the close of the prior day and we are making higher lows, the market action tells us the forward motion will be to the upside. So pullbacks or buy zones until we start chopping around in here, and then it's any man's game. My thought is, if the buyers decide they're going to push those sellers, we could easily get to 40.75, which legitimately we were just at on December the 14th. And that's going to make us pull back. Why am I looking at the ES versus the SPY? Well, TrendSpider's not giving us that intraday motion at this particular juncture, but it is giving us the same range of noise. Notice, SPY is actually running at 39.96.90 at this recording. And so it's sitting right on this edge, right near 33.97, right? So down from 396 to 397. That's going to be the first area. Take a look at this. Remember, look 2 candles to the left, and that's going to tell you what's happening. If you've got a higher low, chances are you're going to get up into the resistance zone, and then the chart is going to jump. All right? Good luck trading today. Stay frosty. You've got to think about things as unresolved because nobody knows what's really happening. So you must be very cautious because the ice is very thin. See you tomorrow.